Hello and welcome to our regulation and policy show on CoinDesk. I'm Jen Sanasi here with my co-host, Paul Hastings' partner, Renato Mariatti. Renato, how is it going?
Wow, I'm doing well. What a busy and exciting time in the world of crypto. So much to discuss, so much regulation and policy activity right now.
It's just moving a mile a minute, and that ominous music introducing the show probably would have been more appropriate if we were talking about policy and regulation last year. But I feel like we need some more exciting hype music for our show introduction these days.
Yeah, absolutely. Look, there's a lot to be excited about. Obviously, with not only Genius Act passed, Clarity passed the House, all sorts of really exciting movement, exciting addresses and statements. And boy, do we have an amazing lineup today to talk about all of it.
Totally. I see some of our viewers commenting hello and hi and adding emojis into the chat. We definitely encourage you to put your questions and comments below this video as we go through. We are live, so if we see them and we think they are appropriate, we will get to them during the show. We have SEC Commissioner Hester Peirce coming up in just a second, and later on, we have Ari Redbord from TRM Labs talking about a very interesting and I think exciting coalition for this industry. And then we're going to wrap the show up talking about Taylor Swift and Travis Kelce getting engaged. I was wondering what excuse I was going to have to talk about this because I am one of the Swifties that is very excited. And there is a crypto angle, a very interesting crypto and legal angle that Renato and I will be talking about at the end of the show. So, Renato, I think we should get right into it.
Well, let's go.
All right. Our first guest, like I just mentioned, is SEC Commissioner Hester Peirce. She is fondly known to the industry as Crypto Mom. She joins the show now. Hello, Commissioner.
Hi, Jen and Renato. It's great to see you. Of course, I'm going to start with my disclaimer, which is that my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners.
Of course, it is wonderful to see you too. And Renato and I were just talking before the show, reflecting on consensus. I believe a year ago, Commissioner, when you said to us, and it was something that really stuck with me, it was something I said on many shows after, that, enough people in DC didn't care about crypto or didn't care enough about crypto. And boy, how that's changed. So I just want to start off with a little bit of a reflection there. I mean, just thinking on the last year, sitting in your position, what are you reflecting on? Like, how are you feeling in this moment?
It's certainly nice to be at the SEC at a time when the SEC is not hostile to crypto the way that it has been over the past years that I've been here. We really have an opportunity to do something good, to set up a regulatory framework that makes sense, that allows people to do what we've been saying for a long time, which is come in and register. We're really eager to work with people to get to a place that is good. We're working in an environment where Congress is actively considering these issues. The president is supportive of building a sound regulatory framework, and so it's really a very different environment.
So one thing that captured a lot of attention, Commissioner Peirce, is your statement regarding tokenization. You came out and you were very clear that I think it was something like tokens are enchanting but not magical, and that nothing about tokenizing a security means that it's not a security anymore. I'm curious if you can explain for our viewers who may not have been reading your statement exactly why you came to that view and why you thought it was important to let everyone know that and put that marker down on the table this early.
Well, that is kind of the other side of what's going on in the crypto regulatory space, right? One thing that we noticed when we took this 180 and started to take a more proactively positive view toward building a sensible regulatory framework is that a lot of people have been talking to us about wanting to tokenize real world assets, including securities. And I think that's interesting, and we're certainly eager to work with people on experimenting with that. But I think one thing we've seen is some people think that if you tokenize something, then it somehow loses its status as a security. And I wanted to remind people that there really are some very complicated questions that have to be answered depending on how you tokenize something. For example, it might be a security-based swap. and different rules apply for security-based swaps than other types of securities. And so people really do need to go about this very carefully. We are very enthusiastic about working with people on tokenization, but we do urge people to come and talk to us.
So, Commissioner Peirce, I guess if I were to sum up what you're saying is that the existing frameworks really apply to tokenized securities because they are similar or the same as the securities that existed before these tokenized products. And in the cases where they don't, they really should engage with the agency to look for exceptions or a new way forward.
Exactly.
I want to now talk about Project Crypto, Commissioner. You know, Chair Atkins recently launched this, I believe was earlier this month. There are 4 pillars: token offering, custody rules, DeFi innovation, and collaboration. From where you're sitting, I'm curious which one you think is the most critical to implement first to really signal that the US is open for business to the crypto industry.
Well, I think you've seen us collaborating in very public ways. We've had a series of roundtables at the commission. I'm going through now a series of on-the-road roundtables where I'm meeting with smaller crypto projects in different cities. It's sometimes hard for people to come to DC. And then we've also gotten a lot of written input and had meetings. We put out a series of questions very early on and have been getting great feedback on those. And we're working with people across the government at the CFTC. We're providing technical assistance to Congress, working with others to produce the President's Working Group report on digital assets. So there's been a lot of collaboration. And I think that's really a necessary basis for us then to look for ways to build on those other pillars that the chairman mentioned in his speech.
So I wanted to ask you, Commissioner Peirce, about a couple of comments that Chair Atkins made recently. In Jackson Hole, he recently said that very few tokens are securities. He previously said that, I believe, in a prepared remarks, that contrary to what the SEC had said in the past, that most digital assets were not securities. I was curious your reaction to his comments, and also what you believe the role of the SEC should be in regulating crypto in a world in which the SEC is stating that most digital assets are not securities.
Yeah, well, I was really happy to hear him say that because it's something that I've been saying for a long time, and I think it really is a more precise legal way of looking at crypto. Now, the fact that most assets now, crypto assets now, are not securities doesn't mean that in the future that'll be the case. I mean, if people really do take to tokenizing securities, then there will be a lot of crypto assets out there that are securities. And you might also end up in a situation where, because the SEC is willing to work with people who want to sell tokens in securities offerings, that people will look at that as a reasonable path forward. And so if you take an asset like a crypto asset and you pair it with promises to people about what you're planning to do as part of an investment contract, then that is a securities transaction. And that's where we want to help people to think about how to do those transactions and to understand when those promises fall away from the crypto asset that was being sold. And so there's some really interesting legal questions, but to get to those questions, we really need to start where the chairman started, which is to acknowledge that most of these are not actually in and of themselves securities.
Commissioner, you just mentioned working with the CFTC to get clear rules for the industry. We were just talking about how many of these crypto tokens are not securities. I'm curious how you're looking at the current construct of the CFTC. As of next week, it's going to be a one-member agency. Does that slow down progress?
Well, I think the CFTC has been very public about the work that it's doing on crypto, and I don't think that will change with the departure of the one of the two commissioners who's there now. And certainly, there's a lot that we can do under the authority that we already have. And I think the President's Working Group made it clear to both agencies that we should both be working with the authority that we have, even before legislation is finalized.
So a lot of trading right now in crypto, and a lot of people's interest in crypto is actually through ETFs. And there was recently some guidance that was issued regarding in-kind redemption of crypto ETFs. Can you talk about the near-term impact that could potentially have on interest in crypto?
Well, I think for a long time, people have told us that would be a better structure, and it didn't make a lot of sense to people that you couldn't do in kind. And so allowing market participants to not have to go and sell crypto to get cash and then put, it's just it's a streamlining of it. If you can pay out and be paid in the crypto asset itself. So I think it's just operationally makes a lot of sense. It's one of these legacy problems that we had from taking a different approach to crypto than we did in other areas. And so I think it's just trying to level that playing field.
Commissioner, I want to come back to talking about the SEC roundtables and the roadshow that you said that you're currently on. I just want to hear your perspective here. Have they been effective? What's gone really good? What have you maybe evolved along the way as there are more roundtables and you engage in more conversations with the industry? Like, are you achieving the goals that the agency set out to achieve when you built out this roadshow?
Yeah, I mean, I recently went back and watched one of the early roundtables that we did, just because I wanted, I was there, of course, to watch it the first time, but just I wanted to see if there were any themes that came out from watching it. And I think one of the themes that came through, for example, was that entities that we regulate, exchanges, brokers, should be able to serve their customers with respect to digital assets, with respect to crypto. And so we need to figure out, I mean, it's already allowed under our existing statutes, but we need to make sure that we preserve that. And so there have been these are really substantive discussions that we've had, and I found them to be quite valuable. The roadshow that I'm on now is really a bit different than what we had tried to do before, which was bring together academics, industry people, people who are critical of the approach that we're thinking of on regulation. We wanted to have a really robust discussion with lots of different viewpoints. Now we're looking to talk to particularly new crypto projects and what are the regulatory challenges they're facing. So I think we'll get some different input from these roundtables that I'm doing on the road, but I expect them to be equally useful.
Yeah, I'm excited you're coming to Chicago soon. Speaking of that, we did have in Illinois an act that was passed recently in which the state is taking its effort to regulate crypto, and that's not new. That's part of a trend in which, of course, there's a BitLicense in New York. There was a law passed in California. Well, what should the role of states be in regulating crypto?
Well, states are definitely a very important partner for us in all of the work that we do. And so I expect them to continue to play that role in the crypto area as well. It is important, I think, one thing that we see is when there are a lot of conflicting state laws about things that have maybe different obligations, it can be quite difficult, especially for smaller new entrants, to try to work their way through all of those different laws. And so I think we have to think strategically about where preemption of state law makes sense, but we will always view state securities regulators as partners of ours.
Commissioner, thanks so much for joining the show. It is always a pleasure discussing these topics with you, and I'm sure we will do it again soon.
Thanks for having me.
That was SEC Commissioner Hester Peirce. All right, we are going to keep the ball rolling here. TRM Labs has launched the Beacon Network, a real-time crime-fighting network that unites a coalition of major players like Coinbase, Binance, PayPal, and global law enforcement agencies. Joining us now is friend of the show and TRM Labs Global Head of Policy and Government Affairs, Ari Redbord. Hello, Ari.
I am so happy to be joining you both today. Thank you so much. It's great to see you guys.
We are so happy to see your face as well. We're going to dive right into this. Talk to us about the Beacon Network. Maybe for the audience, just lay a foundation for us. What is it? How is it going to work?
Absolutely. And thank you. So basically, since 2023, we've seen about 50 billion in scams and fraud within the crypto ecosystem. As we've talked about before, still a tiny, tiny number compared to overall activity within the growing crypto space, but still existential. It means the loss of life savings for people. And we've said to ourselves, how do we stop this? And the way we stop it is by interdicting the funds that have been stolen. And that can get funds back to victims. And that can also be a deterrent for bad actors who are trying to use crypto to commit scams and fraud and other types of illicit activity. So what we realized is that like one firm, whether it's a blockchain intelligence firm like TRM or like an exchange like Coinbase, can't do this on its own. So we said, all right, like who are the Avengers within the crypto ecosystem? We want everyone in this. So to your point in terms of the lead, we reached out to Coinbase and Binance first. And they were really all in on this. We then brought on PayPal and Stripe and Robinhood. Ripple is a huge part of what we're doing. Exchanges like OKX and Kraken, Zodiac Custody. And then we said to ourselves, all right, well, who are the best investigators in the world? And in many cases, that's global law enforcement. So think sort of the largest leading law enforcement agencies across the globe, but also people like ZachXBT on Twitter, who is arguably one of the best investigators in the crypto ecosystem. Zero Shadow, right? Firms that are doing this, individuals that are doing this. And what they're able to do is they're able to flag addresses that are engaged in illicit activity, illicit transactions, and alert this network. Think of it as a lighthouse, right? Sending that beacon, sending that alert so that exchanges know that illicit funds are moving and interdict them. So while we think of public-private partnerships oftentimes as these static, groups of people sitting around a table or something, coordinating, this is real-time alerting and interdiction network. And we've brought as many folks across the crypto ecosystem, and it's growing. It's really exciting to see the momentum around it. We announced it last week, and we're already sort of onboarding new members.
I have a quick follow-up for you, Ari. Previously, I think the message here was if you're self-custodying and you lose your crypto, there is no recourse for you. It's gone. Is this a solution to that? Is this the answer to folks saying, I have a bank account. If the money from my bank account gets lost, the bank is going to pay me back?
It's certainly slightly different, right? What we're seeing in crypto and why the promise of cryptocurrency is cross-border value transfer at the speed of the internet. But bad actors are now able to move funds faster and in larger amounts than ever before. However, what Beacon really does is stops funds from being off-ramped. So if someone steals, your individual funds in a fraud or scam type situation or a hack, we've seen a record-setting year for hacks in 2025. Already about 2.5 billion. Much of that was in the 1.5 billion Bybit hack. So what we need to do is we need to essentially close the crypto ecosystem to bad actors who are trying to off-ramp those funds. And oftentimes it becomes a race. And that race is now real time. It's 24/7. Threat actors are not working 9 to 5. They're not taking weekends off. So we need to have automated alerting to those exchanges so you can off-ramp the funds wherever they're stolen from.
You said a minute ago you gathered the Avengers. I don't know if that makes you Captain America, Ari.
I am nowhere near good looking enough to be Captain America, Renato. He does not have this head.
He's always been my favorite Avenger for what it is worth. But in all seriousness, there's a lot of illicit activity that may increase as crypto grows, right, and becomes more popular. One thing that I'm interested in is sort of tension between anonymity and privacy, and obviously illicit activity on the other side, right? In terms of trying to strike a proper balance in fighting illicit activity versus privacy. This, I think, was crystallized in the recent Tornado Cash prosecution. How, how do you answer those who say that actually they're not able to conduct transactions in a way that ensures privacy to them because there's all this public tracking and working together to try to find potential wrongdoing?
It's such an important question, and to me, the most important conversation going on within the crypto ecosystem today. The DeFi Education Fund put out a letter a few days ago, which I think was absolutely critical to the conversation. And I think the challenge for regulators and law enforcement and others is how do we thread that needle between ensuring that lawful users have the privacy that they need to engage in an open financial system, and yet stop bad actors like North Korea from taking advantage of the promise of cryptocurrency. And I think that's really what Beacon is focused on. We're not associating individuals, and never have, with their alphanumeric crypto addresses or activity. We're only focused on illicit actors. And I think as long as governments are focused on the actual bad actors, not those who are either building or leveraging technology, then I think that's exactly how we do that balance. We need to use technology, zero knowledge proofs, digital ID, to ensure privacy and the ability to transact privately, but we also need to use every tool we have in the toolbox to go after illicit actors. Because look, if we can continue, if bad actors like North Korea and other can steal and off ramp billions of dollars from the crypto ecosystem, then none of this really works at the end of the day when people can get their funds stolen at the speed of the internet. So I think we really need to do that balancing, and Beacon is specifically built to go after bad actors on that race to the off ramps in real time.
So I understand that Beacon is focused on stopping funds at centralized exchange off ramps. Talk to me a little bit about how you're thinking about some of the more complex tools like using DeFi protocols, cross-chain bridges, mixers, like Renato just mentioned. How does that come into play?
Absolutely. And I think one of the coolest things about Beacon is we have there are a number of they're in the release, 1inch, Rhino, a whole bunch of other DeFi players that are part of the Beacon network. We have bridges, right? Because they have this unique capability to stop funds from going across that bridge, from engaging with that DeFi protocol. It's a different system, right? You have those centralized exchanges where everything is going through large compliance teams, right? Places like Binance and Coinbase and Kraken have compliance teams that are the size of many banks. And those are the people who are triaging those alerts, who are looking at all these things. In DeFi, it's much more automated, right? We're going through that protocol, through that smart contract. So DeFi is an absolutely critical piece of the overall puzzle. I will say that, Beacon, and this is why regulation has long been focused on centralized exchanges, because bad actors still need those off ramps to convert those funds from crypto to fiat, to actually use them for weapons proliferation, for destabilizing activity, for any kind of day-to-day commerce. That may change at some point. It likely will. But today, it's those off ramps where the most vulnerability is. And what's so cool about Beacon is, look, I mean, the overwhelming amount of lawful activity is flowing through Beacon members today. So what we've really been able to do is create that defensive mechanism, so just bad actors are not able to off ramp those funds.
One issue that Jen alluded to previously is I would say, increasing crime, including violent crime, related to private keys and obtaining private keys. Obviously, there's been some significant cases recently. There's concern that the Genius Act, rise of stablecoins, could lead to more of that if people are moving more of their wealth out of fiat currency and putting it into, for example, stablecoins. Are you concerned about the rise of crime associated with obtaining private keys to get access to people's tokens?
It's a great question, and I think it's ultimately a good thing. All of this, right? What this shows is the crypto ecosystem is growing and really flourishing, and bad actors gravitate to where the money is. I think I said this something last time, and you used it as a clip, and I saw all kinds of people commenting. But I think the reality is the ecosystem is growing, and lawful activity is growing, and so is illicit activity. I am particularly disturbed by these so-called wrench attacks, these violent crimes associated with crypto that you're describing. I was a prosecutor for a long time, and one thing that a lot of people don't know is that the U.S. Attorney's Office in D.C., where I was for about 11 years, is also the prosecutor of local crime there. So I did homicides and sex offenses and robberies and these types of things. And to see the marrying of this type of violence with cybercrime, where you can then move those funds at the speed of the internet, is harrowing to me. And someone who's involved in this space, as are you guys, it really hits home. But I would say that, like, even in those violent crime cases, we're working with compliance teams and others to track and trace the flow of those funds, ultimately to do things that we would never be able to do if in a robbery where someone's taking your cash or your iPhone or something like that. There's a great case involving Coinbase's global intelligence team, where they use TRM actually to track and trace funds that were stolen in a robbery, a very brutal robbery in North Carolina, that ultimately led to the a 47-year sentence for the ringleader of this violent crime ring. So there are things that we could do that we never could before. It's certainly disturbing. We're going to see more illicit activity, but it's going to become a smaller and smaller portion overall because the ecosystem is growing so fast.
Ari, I want to take a question from our comments section here from Matt Shank, who says he has to run, but maybe he can watch this afterwards. He says, who determines bad actors? And I imagine the answer there is, people who steal things, if I were to simplify that down. But if I can elaborate maybe on his question, how do you ensure that good actors aren't accidentally flagged and their funds are frozen?
Yeah, no, it's absolutely critical. And that's why legal process is such an important part of this puzzle, right? Law enforcement is investigating a case. They ultimately have to go through a legal process to go to that exchange and ultimately identify that address and potentially block or freeze those funds. One piece to Beacon, which is so cool, and some of it is happenstance and timing. We were building Beacon just as the White House was putting out its 160-page report, and while the discussion draft for the market structure bill came out of Senate banking. And if you recall the discussion draft, there's a number of pages of that bill that are dedicated to the idea of putting together essentially the public-private partnership that Beacon is today. And in all of this, there's a ton of focus on ensuring privacy, ensuring rights of lawful users, ensuring due process. One thing that Treasury suggests, or the White House suggests in that 160-page report, is this idea of a hold law. And that's essentially to give the exchanges the time that they need to investigate, to ensure that we're talking about illicit activity, that we're talking about ransomware, hacks, scams and fraud, right? Existential threats, terrorist financing, child sexual abuse material, darknet markets, and ensure that someone isn't caught up unfairly. So our hope is that, like, hey, there's a hold law. Let's look at this for a day. And I know people need to move fast and they want to move their funds, but in certain cases where law enforcement is involved, I think a hold law could be very valuable, and it should be very, very guardrailed, 24 hours, 48 hours, 72 hours, to ensure exchanges have the time they need, but that consumers are very, very well protected. I can just say that privacy is top of mind all the time when we're thinking about how to do what we do at TRM. An incredibly important piece of the puzzle is to protect developers in all of this.
Ari, as always, it was a pleasure having you on the
That's
show.
it? We're done?
That's it. I know we ran out of time, but as you know, you're welcome back anytime. You are
I am in.
the best friend of the show.
You two are two of my favorite people. Love the conversations. And so thank you so much for having me on today.
Thank you so much, Ari. That was TRM Labs Global Head of Policy, Ari Redbord. We are just flying through, Renato. Time flies when you're having fun talking about policy and regulation.
Absolutely. Well, you promised me we were going to be talking about Taylor Swift's engagement. So are we going to be talking about that?
We are. We sure are. We couldn't end the show without talking about Taylor Swift and Travis Kelce's engagement. I would say probably the biggest news of the week. And if you don't agree with me, that's just too bad. Now, here's the angle. This is a crypto show, right? So according to reports, they became engaged earlier this month. They announced it this week. And some bettors on Kalshi cashed in on the announcement. Now, Renato, I was so happy we were having the show because this brought up so many questions for me about insider trading, right? Potentially their friends, their family members, the jeweler who made the ring, all had access to this information ahead of time. And so let's just start here. Could this be considered insider trading? Is it not? How do we look at this? And could I just go and start a prediction market about something that's going to happen on this show and cash in like some of the folks who cashed in on this?
Yeah, great question. And I will just note somebody did, it looks like, make, I think, about $3,500. And there was a lot of discussion about that because the yes contract or the token for the engagement went up from 32% to 40% days before the public announcement. It was, and one user in particular bought a lot of yes contract. So there was definitely, I think, an issue there. Somebody knew something that the rest of us didn't know. Well, look, we talk about insider trading all the time. Insider trading is a crime. It is a violation of the law. It is prosecuted, but it's actually very particular. It's not that you're doing something that's unfair to the market. It's that you're stealing something, essentially. The idea is that you're somebody who's an insider, so you owe a fiduciary duty. For example, if you're the CEO of a company or the chief operating officer of a company, something like that. Or perhaps you're their accountant or their lawyer and you owe a duty and you're essentially stealing their confidential information and making money off of it. That is the theory legally of insider trading. When you bet, let's say, you happen, you're married to Travis Kelce, and he got injured, and you bet against the Chiefs that day, you technically know something, but do you owe a fiduciary duty? Are you doing something like that? The answer is it's much more murky in the world of sports betting. And in this world where we have markets that are regulated by the CFTC, there's no clear legal framework about it. And it actually not just did this poly market that we're looking at right now come into play, but there was a recent question about a rather colorful market that poly market created for people throwing dildos onto the WNBA court during games. You could actually make sure that was a yes by just buying a dildo and attending a game and throwing it onto the floor yourself. So I do think that there's going to be increased regulation. I do think there's going to be increased rules and laws around this, Jen. But right now, it's a gray area, and I think an opportunity where we're going to see a lot of people making money in the short term.
I see Jason saying biggest news and putting a covering eyes emoji. It was a little tongue in cheek. There's been a lot of progress on policy and regulation news since we last had this show. But Renato, I just want to unpack this a little bit more. You say you think we're going to see increasing regulation around this, but how can there be when an insider could be really considered anyone, right? Friends, family, like how do you draw a line there? It seems very blurry and something that maybe hasn't been tackled in this way before.
Yeah, a couple of things. I mean, first of all, I do think some of these contracts maybe should not be listed. I mean, there was a bit of a fight, I think, or disagreement between Kalshi and Polymarket on that. There is a provision in the Commodity Exchange Act that says that the CFTC can disallow certain contracts that are contrary to public policy. And there are certain ones, for example, like assassination contracts and things like that are explicitly prohibited. Yeah. But you could imagine certain contracts like this. Maybe we don't want to have contracts that give people an incentive to throw things onto the court in the middle of the game, for example, right. Okay, or hurt someone or disrupt someone's wedding, potentially something like that. Okay, but putting that to the side on these issues of insider trading, and you could imagine that you could have rules in exchanges. I know Kalshi, for example, does have a rule against about possessing information. There are others, though, I will just say, who take the view that actually this helps the market. You're taking private information and putting it out in the market and making the prediction market more efficient. So I actually think there's going to be a debate. I think that you could imagine different exchanges having different rules about this. And I think the question is going to be ultimately when the CFTC, which of course is bogged down in a bit of a little overwhelmed right now and is going to be down to one commissioner soon, as you mentioned, that, you know, the CFTC, I think over time is going to have to create rules, you know, and potentially Congress is going to have to pass laws if this gets out of hand.
Well, I can only imagine that it could get out of hand. I think there's a very good chance it could get out of hand. Maybe we could bet on a contract of if this is going to get out of hand or not. But Renato, I got to ask, from a legal perspective, right? If someone who traded on a tip on Kalshi, what is a realistic legal risk they should be worried about? It sounds like there is none right now, but let's say I have a tip. I know someone's going to throw something at a sporting event. I make a bet on it. Can I expect any kind of repercussion, or should I be wary of anything?
So Kalshi's rules, I think, prohibit. You need to take a look at Kalshi's rules itself. Okay, and so for any time you're trading on an exchange, you need to look at the rules of the exchange. And so for a DCM like Kalshi that's actually regulated by the CFTC, there are rules. You also have to look at the terms of use for if you're just trading, for example, even if it's an overseas market, you need to look at that. But putting that aside, there could be potentially a fraud theory that could be raised regarding your activity. And so it's one thing to know that somebody is going to do something, like you're the jeweler who made the ring. It's another thing to potentially take advantage of something in a way that could be seen as deceiving others to get money. That sounds an awful lot like fraud. So I think if you're going to do something where you're making a lot of money in a way that's questionable, seeking legal advice before that is not a bad idea.
And Renato, this topic came up throughout the show, and I just got to get your opinion on it. CFTC going to be a one-member commission next week.
Yeah.
What does that tell you? I mean, should we be worried? I know we asked Commissioner Peirce that, but should we be worried about the progress of rulemaking in this country with a one-member CFTC who, according to the legislation I've seen, should be taking the majority of oversight for this industry?
Yeah, I'm concerned. And the reason I'm concerned is, as you mentioned, the Clarity Act gives almost all the authority to the CFTC. And I asked Commissioner Peirce about Chairman Atkins' public remarks in which he said almost no digital assets or securities. So we really are in a world where all of this would be regulated, or almost all of this, by the CFTC. And yet, I think they've lost over 15% of their staff. They're continuing cuts in reviews there. The activity has slowed down from the CFTC as of late, and we're down, as you point out, to one commissioner, and no real talk or news that there's going to be more appointments on the way, other than the one appointment of a commissioner who would essentially just replace the current acting chair who's there. So I definitely think it's cause for concern because, as you and I discussed with House Agriculture Committee members when the Clarity Act was passed, there needs to be additional resources to the CFTC, or else it becomes a bottleneck for everyone in this industry who wants to get registered and designated so they can get out there and create blockchain-based companies.
All right, we will just have to wait and see what happens there. One thing is for sure, never a dull moment in this industry. So Renato, I will see you in 2 weeks from now, and I'm sure we will have a lot to talk about.
Absolutely. Looking forward to it.
All right, today's conversations really painted a picture of an industry at a major turning point, moving from years of regulatory battles to finally building the foundational frameworks for the future. Now, if you want to be part of shaping that future, the conversation doesn't stop here. CoinDesk is hosting a regulation and policy event in Washington, D.C. on September 10th. Both of our guests today, TRM Labs Global Head of Policy, Ari Redbord, and SEC Commissioner Hester Peirce, will be speaking. It is an opportunity for attendees to connect directly with key public officials and D.C. decision makers. You can register right now and find all the details at policy-regulation.coindesk.com. For Renato Mariotti, I am Jen Sanasi. Thanks for watching.